Boom! Down goes Paramount, guys. So, Paramount Global Class B stock has fallen off a cliff today. So, they had pretty negative results on their earnings and slashed the dividend. Now, I had this on my watch list at 20, and it has screamed on down below that watch list price. So I am now suddenly very interested in Paramount again. Sold a couple puts because I really, really like this company and have been waiting for it to have a bad result like this and go on the cheap. So, essentially, what they're saying the strategy is behind cutting the dividend is to conserve cash, and they said deleverage their balance sheet. That means they're focusing on possibly using the cash that they were paying out as dividends to cut down on their debt because of the interest rate environment that we currently find ourselves in, which overall probably is actually the better move for the business. They have said that 2023 will be probably the worst year financially as far as their streaming service Paramount Plus, and that they expect things to improve greatly in 2024. So if that holds true, the opportunity to get them cheap today may be quite nice. Now, it's no secret that I'm a bit of a fanboy for some of the brands that Paramount owns. They own all of the CBS and Viacom as well as Paramount content out there. So CBS and Viacom basically means everything from the CBS network as well as everything from classic Nickelodeon, MTV. So we're talking about shows like SpongeBob, Rugrats, and Comedy Central, so South Park. And for CBS, we're talking about things like Star Trek, which is something that's been spitting money on the network for like 50 or 60 years and has a very, very loyal, dedicated following. So I think that in the entertainment space, this is a very attractively valued company, and if you were to compare them financially to something like Disney, sure, Disney is the juggernaut. They've got, Star Wars, they've got Marvel, and granted, yes, Paramount doesn't have anything, I think, that's that big, but when you look through what Paramount does have, they have some heavy hitters in their own right, and I think that it more than justifies the valuation. Now, it's hard to do something like a discounted free cash flow on a company like Paramount because of the difficulty and variability. And you run into the same problem, actually, when you try to evaluate Disney. There's so many parts to the business that each one could do a different thing in a different year. And like streaming could be great one year, but advertising could be down at the same time, for example. Just so happens both are kind of having some financial struggles at this time, which is, reflected in, I think, the cheaper price. Now, if you just go with the default assumptions of the calculation, you come up with $18.78 if you factor in the tangible book value on the balance sheet. Now, when it comes to me, I personally think that with companies like this, and this would include Disney as well, that beyond just the financials, you do have to kind of give them some consideration for the value of what they have. How beloved some of the brands and franchises that they own are. So, I mean, it's hard to put an actual number on, for example, Star Trek or Star Wars in the case of Disney, or South Park or anything like that, where there is such a pretty large dedicated fan base that's been with it for years, if not decades. Like, how do you really assign an exact dollar figure to that? I think that might be pretty hard to do. I kind of arbitrarily have, said in the past that I'm interested in this company anywhere under $20, just because I do think that even accounting for all the variability, they do have the potential to produce a lot of cash flow. They do have a history of, paying out good dividends and such. Now, the dividend is cut temporarily, but if they're doing it to clean up the balance sheet, I don't necessarily mind that trade-off as a shareholder, or potential shareholder in this case. And, I definitely don't mind, having these mid-single-digit assumptions on the cash flow or earnings going forward. I mean, and hey, like, it doesn't really take that much more on these assumptions to actually drive the value up to closer to that $20 range. And as far as the tangible book value, they have been pretty good about keeping a lot of value and equity on the balance sheet, even though they do have a good amount of leverage. And if they're working on improving the balance sheet with in lieu of paying out such a high dividend, we could actually probably expect to see this tangible book value go up. So honestly, I'm pretty happy that this stock dropped, because I view it more as an opportunity for myself personally. But, that's just my opinion. I mean, here's the thing. I know last year Berkshire picked up quite a lot of shares of this company. So, and I don't know if they're going to, decide to sell based on these latest results, but, Warren Buffett and Charlie Munger are known for being long-term buy and hold type investors. So, maybe they see the same thing I do with this company, and that's why Berkshire is in it. But I myself am interested regardless of whether or not Berkshire is in it. Just think that's an interesting thing to take note of. Anyway, let me know what you think about Paramount in the comments below. Give it a like if you liked it. Feel free to subscribe to the channel to be a part of this conversation on an ongoing basis. And also, join our Discord and talk to us about it there. I'll link it in the description. Take it easy, everyone, and have a wonderful day.